This week, gold enters one of the most important setups traders are watching right now. Smart money is watching gold very carefully right now because a major move may be coming next week. This is the current gold market structure on the 1-hour time frame. Right now, XAU-USD is trading inside a major long-term consolidation pattern, with price reacting directly from a critical support trend line near the 4540 zone. The market is currently showing compression behavior, which means a strong breakout or breakdown could happen very soon. Traders should carefully watch the key support and resistance areas, because this next move could define the direction for the coming week. Gold is now sitting directly on a major support zone around 4540. This is a key area for next week. If support holds, buyers may regain control. But if this level breaks, strong bearish continuation could follow. Now let's look at the fundamental side of the gold market for next week. At the moment, gold is facing increasing pressure from several major macroeconomic factors. The first and most important driver is the strength of the US dollar. Recently, the dollar has started recovering again, and investors are gradually moving capital back into USD-based assets. As a result, gold has become weaker in the short term. At the same time, interest rates remain another major factor controlling the market. The Federal Reserve is still not aggressively cutting rates, and the market expectation continues to be higher for longer. This creates bearish pressure on gold, because higher interest rates make yield-generating assets more attractive than non-yielding assets like gold. Geopolitical tensions, including the Iran situation, are still supporting gold in the long run, but right now, those tensions are not strong enough to create an immediate bullish breakout. We also need to watch other important factors, including oil prices, inflation, central bank buying activity, and overall market sentiment. Rising oil prices continue to increase inflation risks, while central banks around the world are still accumulating gold as a long-term reserve asset. However, short-term uncertainty and fear remain elevated, which means volatility is likely to continue next week. Overall, the fundamental bias for next week remains neutral to slightly bearish. Strong US dollar strength, high interest rates, and continued profit-taking after the recent rally are currently limiting gold's upside momentum. But despite this short-term pressure, the long-term outlook for gold still remains bullish. Smart money is now waiting for the next major macro trigger before making the next large move in the market. Now, let's move into the technical analysis of gold on the 1-hour time frame. At the moment, the market structure is showing a very important setup developing. We can clearly see a large descending resistance line, while long-term rising support continues to hold from below. This means gold is currently trading inside a massive triangle consolidation structure. In simple terms, the market is compressing, and compression usually leads to a strong breakout or breakdown move later. Right now, price is sitting directly near a major demand zone around the 4520 to 4540 area. This green support zone is extremely important because buyers have reacted from this area multiple times before. Recently, we saw a strong sell-off in the market, but despite the bearish pressure, gold is still attempting to stabilize above support. Current price action suggests that traders are waiting for confirmation before the next major move. Looking at the key levels, the first major support remains between 4520 and 4540, while the psychological support level sits near 4500. On the resistance side, we need to watch 4580 first, followed by stronger resistance levels around 4620 and 4680. From a price structure perspective, the market is still printing lower highs, while support continues holding underneath. This means compression is becoming tighter and tighter, increasing the probability of a breakout very soon. However, traders must carefully watch the breakdown level around 4520. If gold breaks below this support decisively, it could trigger strong bearish continuation in the market. In that scenario, price could quickly move toward 4500, 4460, or even 4400. Overall, gold is currently sitting at a critical technical decision point, and the next breakout or breakdown could define the direction for the coming week. Now let's move into the actual trading plan for next week, including scalping setups, day trading scenarios, and long-term opportunities for gold. Starting with the current best scalping setup, buyers should closely watch the support zone between 45.30 and 45.40. If this support area continues to hold and bullish rejection candles begin to appear, gold may attempt a short-term recovery move higher. In that bullish scalp scenario, potential upside targets remain near 45.60 and 45.80, while the stop loss stays below the 4,500 level. On the bearish side, traders should monitor the resistance zone around 45.80 to 45.90. If price rejects from resistance with weak bullish momentum, this could create a short-term sell scalp opportunity back toward 45.50 and 45.30. Moving into the day trading outlook, the bullish scenario becomes active if gold breaks above 45.80 and successfully holds that level as support. In that case, the next upside targets would be 46.20, 46.50, and potentially 46.80 or higher. However, if gold breaks below the critical 45.20 support level, bearish continuation could accelerate quickly. Under that bearish scenario, downside targets become 4,500, 44.60, and possibly even 4,400. From a longer-term swing trading perspective, gold still remains macro bullish overall. Central bank buying activity remains strong, geopolitical uncertainty continues, and long-term inflation risks are still present in the global economy. Because of this, the 4,500 to 4,450 area remains a potential long-term accumulation zone for buyers. Looking at the professional market insight, current price action suggests the market may still be inside a liquidity sweep phase. Smart money could be trapping panic sellers near support while quietly accumulating positions before the next major move. Overall, the short-term outlook remains slightly bearish near resistance, while intraday traders should focus on buying support and selling resistance. Long-term bullish momentum still remains intact, but confirmation is needed before the next large breakout move begins. Finally, here's the simple cheat sheet for next week. The 45.40 area remains the primary buy zone, while 45.80 acts as the main sell resistance zone. A decisive breakdown below 45.20 would strongly favor bearish continuation, while a breakout above 45.80 could trigger renewed bullish momentum in the gold market.
This has been your weekly gold market analysis, covering the fundamental outlook, technical structure, and trading opportunities for the week ahead. Stay disciplined, manage your risk carefully, and always follow price action, not emotions. Follow CMS Trading Insights for professional Forex and gold market analysis every week. Trade smart, stay prepared, and I'll see you in the next market update.